The next stock we're going to talk about, we've got 5 in total today, is Eqstra or Eqstra. I've always wondered how one is supposed to pronounce that name, which is not a good sign, I always thought, when you've paid someone to develop a brand for you and people who follow the company closely are not necessarily sure how to even say it. I'll leave that right there. It's a diversified leasing, industrial, construction and mining equipment importer. Remember, it was part of the Imperial Group and got spun off in 2008, which wasn't a particularly good time to get yourself spun off, it must be said. But it's also a major player in the hard rock open cast contract mining equipment area and plant hire, right? And they have a couple of interesting agencies for things like Bobcat and the likes. Market capitalization, not particularly enormous. I'm seeing there 1.2 billion rand, which sounds kind of low to me. Surely it's got a higher market cap than that. Maybe I'm wrong.
No, I think it's got a significant debt base. So the enterprise value is much higher, but they've got around 2 billion rand of debt. So that obviously depresses the overall equity value.
Price earnings ratio 3.91. That's about as low as one sees. And then I'm not seeing a dividend yield either.
No dividends.
Tell me about what's going on here, because operationally, as I said, timing wasn't all that great on its listing. Came out, I think, at 16 Rand a share when it listed in 2008, and you can see it's bumping along there.
Yeah, so this one sort of very heavily geared. It's got a significant gearing, as I said, and that contract mining and manufacturing sector, that's very exposed to the underlying resource sector. Yeah. And you've seen that very depressed. It's very asset intensive. And,
which was why Imperial pushed it out, if I remember.
Yes, that's right. Yeah, and I think a recent sort of comment by the new CEO, Jannie Serfontein, saying that where they had access to the Imperial balance sheet before and they could sort of handle that gearing, it's a lot more risky now, and they're looking to sort of de-risk the business, reduce the reliance on assets, because to some extent they're providing a balance sheet to the miners that don't want to have the equipment.
So where does the debt come from? Do they have like a corporate debt program, and who owns that debt? Is it high coupon debt that's owned by institutions and that kind of people?
Yeah, I think it's a combination of notes that are held by large institutions, money market funds, and obviously their bankers as well. And I think they're looking to replace that gearing and those funding sources from the equipment suppliers, I guess the likes of Barlow and other suppliers that actually supply them, and also large financial institutions, the banks, to take over a bigger portion of the debt.
I have in my notes here a point here that Coronation at some point owned a big chunk of the equity. Are they active as both equity holders and lenders still to the business, I wonder?
No, not that I know of. What you have seen is quite a significant shifting in the shareholder base, and ReCM, which has been a value player, they have recently sold, I think, a large portion. They owned over 5%. They've dropped below 5%. You saw that share drop to 2 Rand. The last reported NAV was 9.20 Rand. So it shows you the significant discount to NAV. Some value investors picked it up at those levels. It's recovered to 3 Rand, but still very depressed.
Well, that's a tricky one then. I mean, let's call it hot or not. I mean, it sounds like quite a tenuous position, but on the other hand, you're saying that it's got a net asset value in terms of what it's got on the books, in terms of its actual fleet and other equipment, which is substantially higher than the share price.
Yeah, so it does have that underpin, and I think it's this sort of this asset-light approach that they're recently talking about, the ability to achieve that move into more of a service-type business. They're reasonably well placed. They've actually got a reasonable logistics business sort of buried in there. You don't see it because, this equipment, that's just the highlight that you see. So they have got some nice assets inside it. But I think it's more wait and see, and the cycle again isn't right.
So again, probably one for the specialist professional investors who can get face time with management to really understand whether or not the current trajectory is going to work out well or not.
Yeah,
so as far as this general public amateur platform is concerned,
stay away from
not hot. Okay.